Today's episode is a little different. We're covering earnings literally hours after they hit the wire. NVIDIA reported after the close today, and given how much of this show has been built around companies buying, selling, and powering AI infrastructure, it felt wrong not to go straight to the source.
That's NVDA, and this one connects almost everywhere we've already been. Amazon, Vistra, X-Energy, even Nebius back in Episode 8. We'll get to all of it.
Welcome back to Order Flow, the show that breaks down the signals that actually move markets. Insider buying, institutional flow, and the milestones that separate stocks from real businesses. I'm Matt.
And I'm Ryan. Standard disclaimer. This content is for informational and entertainment purposes only, not financial advice. The hosts may hold positions in the securities discussed now or in the future. Always do your own research and consult a licensed financial advisor before making investment decisions.
All right, the headline numbers. Fiscal second quarter revenue was $96.2 billion, up 18% from last quarter and up 106% from a year ago. Gross margin was 75%, basically flat.
Non-GAAP earnings per share came in at $2.22, more than double what it was a year ago. And the company returned about $26 billion to shareholders this quarter through buybacks and dividends.
Data center revenue alone was $89 billion. That's over 90% of the entire company now. Split into two buckets. Hyperscale revenue was $49 billion, up 13% sequentially on sustained Blackwell demand.
And the other bucket, Neo-Cloud, industrial and enterprise customers, what they call ACI&E, was $40 billion, up 25% sequentially and up 138% year over year. That's actually the faster-growing piece right now.
For context on how big the runway still looks, cloud industry backlog is now over $2 trillion. Management said the top 5 hyperscalers alone are expected to spend close to $800 billion on CapEx this year, and $1.3 trillion next year.
Now the big product news: Vera Rubin, the next-generation platform, started shipping this month. They've already got purchase orders from every major hyperscaler, AI cloud, and system builder. Management's calling it the fastest product ramp in company history.
And the numbers behind why? 30 times higher throughput per megawatt, and 35 times lower cost per token compared to the current Grace Blackwell Ultra generation.
There's a stat CEO Jensen Huang kept coming back to: how much revenue NVIDIA captures per gigawatt of data center built. It was about $18 billion with the Hopper generation, $25 billion with Blackwell, now $40 billion with Vera Rubin.
And he said the direction only goes one way. As long as the productivity keeps climbing alongside it, customers keep racing to the next generation, and NVIDIA keeps capturing more value per gigawatt, not less.
Okay, here's where this gets personal for our listeners: the Amazon connection. On this very call, NVIDIA announced AWS is buying an additional 2 million GPUs, starting this quarter through the second quarter of fiscal 2029.
Plus new Vera CPUs, and Oz adopting NVIDIA's full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its warehouse robots. If you remember episode 24, Amazon's own CEO talked about AWS staying the best place to run NVIDIA chips. This is that relationship, expanding in real time.
And there's a Vistra and X-Energy thread too. NVIDIA's management talked directly about working with, quote, power generator companies downstream and securing land, power, and shell capacity years in advance of actually needing it.
That's literally the same infrastructure category behind Vistra's Helix partnership, which includes NVIDIA by name, and X-Energy's Project Prometheus collaboration, also with NVIDIA. NVIDIA even announced a new deal this quarter with SoftBank Energy, over 4 gigawatts of capacity secured at a Portsmouth campus, specifically to host NVIDIA Compute for OpenAI.
Quick mini update while we're on the subject: Nebius, which we covered back in Episode 8. NVIDIA name-checked Nebius twice on this call as one of the flagship Neo-Cloud partners it's helped build from the ground up.
And Nebius was confirmed as the first customer for NVIDIA's new Grok accelerator line, shipping later this quarter. That builds on the $2 billion equity investment NVIDIA made into Nebius back in March, which is funding Nebius's plan to deploy more than 5 gigawatts of NVIDIA systems by 2030.
Now before bull and bear, two real risks straight from the 10Q. First, China. NVIDIA shipped less than 1% of total data center revenue to China this quarter under government license, and even that was margin dilutive. Going forward, their guidance assumes zero China data center revenue.
And second, customer concentration. One customer alone makes up more than 20% of quarterly sales. Hyperscalers combined make up more than half of data center revenue. And several of those same customers, Amazon included, are actively developing their own custom AI chips.
All right, valuation. NVIDIA's market cap is around $5.07 trillion. Stock closed around $209, down from the prior close, actually, a bit of a muted reaction given the size of the beat. 52-week range is $164 to $237.
Analyst sentiment is still overwhelmingly bullish, 58 buy ratings against just one sell. Average price target is around $305, implying about 46% upside, with some targets as high as $500.
Okay, bull case. Point 1, revenue more than doubled year over year while margins held at 75%. Scale and profitability are compounding together here, not trading off.
Point 2, that $2 trillion plus cloud backlog, and roughly $800 billion of hyperscaler capex expected just this year, gives real forward visibility into demand.
Point 3, Vera Rubin is tracking as the fastest ramp in company history, already carrying orders from every major customer type at a dramatically better cost and efficiency profile.
Point 4, revenue per gigawatt keeps climbing generation over generation. NVIDIA is capturing more value from the same physical footprint of AI build-out, not less.
Point 5, the AWS relationship just got materially bigger this quarter, proof that even the biggest, most vertically capable customers keep expanding their NVIDIA footprint rather than shrinking it.
Point 6, the faster-growing piece of the business, Neo, Cloud, and Enterprise, grew 138% year over year, which naturally dilutes hyperscaler concentration over time even without anyone leaving.
Point 7, NVIDIA is actively financing and de-risking its own ecosystem's ability to pay through frontier lab investments and that new $500 billion financing platform with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR.
And point 8, even after this run, Wall Street's own targets still imply real upside, and the stock actually traded down on a quarter this strong, which some would read as room left to run rather than exhaustion.
Okay, bear case, and there's real substance here too.
Bear point 1, China is now essentially zero in the forward outlook. That's a major addressable market NVIDIA has structurally lost access to, for now, with no clear timeline for it coming back.
Bear point 2, customer concentration is stark. One customer over 20% of sales, hyperscalers over half of data center revenue, and several of those same customers actively building competing custom silicon.
Bear point 3, management's own framing is that supply, not demand, is the constraint. That's great for pricing power today, but it means a huge chunk of guided growth depends on flawless execution across memory, land, power, and foundry capacity, all at once.
Bear point 4, supply commitments more than doubled this quarter, from $119 billion to $279 billion, mostly tied to memory. That's a massive financial commitment resting on demand holding up exactly as modeled.
Bear point 5, NVIDIA is now directly financially embedded in its customers' ability to pay, through nearly $50 billion invested straight into frontier AI labs. If AI lab economics disappoint, NVIDIA has real exposure, not just an arm's-length sales relationship.
Bear point 6, operating expenses are climbing fast, up double digits sequentially, a reminder that defending the full-stack platform lead takes continuously rising investment.
Bear point 7, at a $5 trillion plus market cap, even a modest disappointment relative to sky-high expectations could move this stock meaningfully, given how much future growth may already be priced in.
And bear point 8, export control risk is explicitly ongoing and unpredictable, by NVIDIA's own admission. The China situation could easily expand into other regions if policy shifts further.
So the tension is about as sharp as it gets for a company this size, genuinely extraordinary growth, and a widening moat. sitting directly on top of real geopolitical, concentration, and execution risk that management itself is flagging in black and white.
Exactly, milestone tracker. How do we track this one?
Milestone 1, the Vera-Rubin ramp. Does it hit that roughly 20% of data center revenue target in the third quarter and keep climbing from there?
Milestone 2, third quarter earnings, guided to $108 billion in revenue and 74% gross margin. Watch whether hyperscale growth actually reaccelerates like management expects.
Milestone 3, real progress on infrastructure deals like the SoftBank Energy Portsmouth campus, as proof the land PowerShell strategy is working at scale.
Milestone 4, any shift in China export control policy, in either direction, given the forward guidance currently assumes 0.
Milestone 5, how that $500 billion financing platform actually deploys capital into AI lab infrastructure over the next year.
Milestone 6, Nebius's rollout of the new Grok product as first customer, and how the broader Neo Cloud revenue share model performs in practice.
And Milestone 7, any concrete signs of custom silicon actually taking real share at OpenAI, Anthropic, Amazon, or other major customers.
That's NVIDIA, the company sitting at the center of basically every AI infrastructure story we've covered on this show, reporting a quarter that more than doubled year over year, with real risks sitting right alongside the growth.
We'll check back in as the next milestones hit. That's order flow. Follow us wherever you're listening, and we'll see you in the next one.